Good afternoon, everyone. Jason here. Today is October 7th, and this is your aftermarket update. All right, you can tell by the price ladder in the top left-hand corner of the screen that we did have a good day here at the Oil Trading Group. If you were in early on the session with us, you know that we had some losing trades leading into this 60 ticks times 2 lot CL trade of the day. We're going to talk about that trade here in just a moment. But one of the things that we had talked about early before the session actually got started is that we were looking for the market to ultimately be selling off here today. So let's talk a little bit about why we felt like that selling was going to be in the cards here today. We're going to start with this daily chart. And one of the things that I want you to notice here is that obviously the CL has been on a fairly prolonged, this is about a 2-week move to the downside. There was the gap here when the Saudi oil fires occurred, and then the market had been selling off until Friday. And then Friday you had this rally, and of course this is today's bar on a slight rally as well. But one of the things that I wanted you to look at and pay attention to here is the fact that the volume, this is a 20-day moving average on your volume bars. And one of the things you notice is that the volume was very aggressive on these moves to the downside. When you get to the first up day, and I think this is 13 or 14 days, when you get to that first up day, you'll notice that the volume closed below the 20-period moving average. Same thing here today. The volume closed below the 20-period moving average. So all of the down days, with the exception of the big rally, which makes a lot of sense here, right, that the market would be energetic to the top side. With all that participation, the market almost immediately begins to sell off on much more aggressive volume. Once you find the bottom here a little bit and the market begins to rally, you can tell that there's very weak follow-through on the rally, and that the volume, at least coming into today's session, was below the 20-period average, and that's how it ended up here today. So again, using volume as a gauge, the moves are less fluid, and the activity is less pronounced going into those sessions. All right, so let's take a look here at your profile. One of the things that we were looking at as we were heading into the session today, this is settlement, and this is your ETH session profile. And so again, one of the things that we had talked about is the open of the session today, or the majority of the overnight session. In fact, we had rallied. Let me pull this chart out for you as well. This is the RTH session, and so there was a gap between where we opened today at or the low here and where we opened at 53.51, and this was 52.90. And so this was an important tell for us today. Also, the majority of the overnight session had been long. Right, the majority of this overnight trading session had been long, so we were looking for a pullback into settlement. And again, we were on that weaker volume. So again, weaker volume on the rally. We had spent the majority of the overnight session above settlement, and we had a gap open. So we had an idea that the market was going to try to fill that gap because, again, there was just not a ton of participation on that topside rally. So that was kind of our mindset walking into it here today. That did cost us a little bit of challenges early in the session as we rallied here to the DS signal. We actually were in short in this area, and then it hit the volume weighted average price and immediately rallied. I got short a couple times in here. So again, if you were with us today, you know that we were down about 29 ticks per contract heading into this trade that we took here today. So the market rallies up into your DS target. And again, these are one of your market maker levels. And there's a 10-tick range around that box, so 96 here. So what I was telling the group in there today was that if it comes up to that DS target, it can't get through it, we would be looking to try to take a short out of that zone. Now, there were a couple of things from a liquidity standpoint that allowed us to feel comfortable taking this short. And once the market broke through this 96, we jumped on board at 94. Now, one of the things that we talked about, and this happened, by the way, at around 10 minutes after 10 Central Time. So, of course, it was kind of in that interesting time of day, 20 minutes before the European session closed. I was a little bit nervous about it being able to stay the course. But again, the idea that we had is the rallies. We were coming off of 13 out of 14 down days on the daily chart. The one only up day that we had, the volume on that participation to rally the market had been very light. We had spent the entire session above settlement in the overnight session. That typically has a tendency to correct itself. And we were also looking at the fact that we'd run into one of our market maker level resistance ideas. So what we talked about as potential targets was we have a sweet spot down here at 02. We had that Friday RTH session high and the gap at 52.90, but that we were looking for the overnight inventory to correct itself all the way down to settlement. So as we begin to get into this trade, it really does just sort of work its way around. And I had drawn these levels on the chart as I was telling the group that we needed to close below these different levels, and then we would be trying to make that play all the way down to the volume-weighted average price. If we were to break that, then there were some other levels down below us that we would be looking to get through, primarily this 20 on the spike down that happened at around 9 a.m. Central Time earlier in the day, and we were going to need to get down through it. So as the market begins to rotate, you see we spend a lot of time rotating until we finally get the breakthrough, the volume-weighted average price, and we get this spike down to 30, which, again, was an area here that, and actually it was like right up here at 29.30, that these candles had not closed below that level. Market sells off and continues to push down. One more time, you get a push right into your sweet spot. Now, it was at this sweet spot that we began to tighten up the stop, and I had two decisions that I wanted to make. In fact, I'm going to take off now some of these drawings here. And decision number one is I was going to say, did I want to put my stop here above that double top, or was I more interested in, let me copy this, and was I more interested in just putting it above this level here, which was the top of that swing at 36. I chose the smaller one simply because it gave me an even 60 ticks. So I was in at 94, the stop was at 34. That was an even 60 ticks times 2 lots. The market sells off all the way down to your sweet spot. I'm going to take this box off just to declutter the chart here. In fact, I'll turn these levels off for a minute as well. And so again, I put the, we can take that off here. I put the stop just above this double top, and it could have been right up here at this 36. The market comes down to your sweet spot, hits it to the tick, and rallies just enough to take me out and get me up to 36, and gets right up to that double top there. What is then becomes a double top, and then the market slowly works itself all the way down until it takes out settlement. So that was going to have been our target. So as it was, instead of having 113 ticks on the trade, I ended up only with, I say, with 60 ticks times 2 lots. I was plenty happy with that. It was a tough start to the session today. And so to be able to get out of the hole and then double it up with what I had, to double up my losing with winning is always a very good thing. So like I said, I ended up today plus 62 ticks on the CL. So all in all, a very good day. And that really is the mantra that we have in here every single day. Cut the losing trades short, let the winning trades run. That is really the single biggest advantage that we have in here every day, and we continuously run those trades to big targets. Today could have been 113 ticks were I not stopped out, and you'll see this on the video that I show you here. My trail stop is right here at 34. It pops up to 36, and in retrospect, you say, well, why didn't you just take that 2 extra ticks and put your stop above there? And you absolutely could have, but again, this was a big bounce off of our sweet spot. And that is one big bar straight up, and there's really no idea that this is going to stop right there, right? You could have, probably the better place would have been to put it above the VWAP, but I wanted to capture an even 60 ticks. It had been a really difficult trading into that part of the day for me, and really that's 12.10 or 10.10, and that comes up and takes me out at around 12.30. So I sat in this trade for 2.5 hours, so I was a little bit fatigued by watching this trade go back and forth like this. And so anyway, we took it out at 60 ticks. In retrospect, you could have had it a little higher and you would have done a little better. But at the end of the day, that's the way it is. And I feel really good about how that trade ended up. So I'm going to let you watch that trade. I'm not going to make you watch the entire 2 hours and 20 odd minutes that I was in that trade. But what I will do is let you see where I get in. You'll see when I get to break even. I'll chop the trade up into pieces, speed it up, put some music behind it, so you have the opportunity to see this trade, where I get in, and then what the final tally is that you can match up with the price ladder that you see on your screen there. So again, as always, I want to say thank you for watching the videos here at the Oil Trading Group. And without further ado, here is that OTG CL trade of the day. I'm in at 94 short. 94 short. The stop here is 07. And we're going to look to try to come down to the DS signal down there at 60.